Hello dear traders, petar.jacimovic here from vicanalysis.com. I want to post my idea on the yen pair, since we got Bank of Japan actually did cut the rate about 10 base points, and we got a massive reaction here. So I wanted to explain you more about and why the volume analysis is so powerful, and volume price action analysis, why it's so powerful, combining with also Fibonacci work and with standard patterns and so on. So basically what happened here, the Asia session, we got cut rate of the Bank of Japan, and that caused a lot of liquidity here on the forex market. And as you can see, this is the euro yen currency pair. We got a movement of about 270 pips in about 5 minutes, so just spike it up, in a very ultra wide spread, in a ultra high volume. And as you know, if you follow the volume analysis, if you follow my work, you know that buying climax is actually when something have the big volume spike and ultra wide spread. It's actually big. It takes big attention from professionals to watch and observe later on to build on positions, because again, most professionals pay attention on the liquidity. If there is no big liquidity on the forex, there is no big movements on the forex, there is no, from all large funds, managers, fund managers and so on, it's not interesting to watch even FX market if there is no big reaction and good conditions later on to build positions. So again, that's why the importance of the news releases, because the news are creating the liquidity. And if you know how to liquidity, of course you don't trade during the news or before the news or trying to pick up to think what will happen. You just wait and see what the news effect will be, what actually the news is, and later on you decide to build positions on. So again, all about how to do that and what's the best thing how to do and how to trade that. It's actually my mentorship program, which I teach my students. But back here, what happened is actually volume spike, ultra high volume. This is a tick volume. Again, forex, it's not centralized market, so this is a tick volume, and this is a buying climax. Later on we got a strong reaction from sellers, and we saw the existence of the sellers. So we saw that sellers are actually interested to build on, and they're not afraid of this panic buying from the crowd, because of the news. This is a just news effect. We'll put here like this is a like buying climax, and what's happening there after, it's first reaction from sellers, and it's called automatic rally. And this is according to the Vykov research. Richard Vykov, he was one of the most successful traders, back in 19, back in 100 years ago. But again, buying climax, it's a stopping action. Sellers came in, we got an automatic rally. What happened after? We went to test that area, we went to test this area, and also that is a Fibonacci expansion 61.8 from this A, B, C point, and this 61.8. So now you wonder, as you see, I have two selling positions, 0.5 risk per one, and I will try to pick up this 61.8 from this ABC new one we got here, and I will try to pick actually like 100 pips, risking the risk was about 30 pips. So I will try to pick 1-3 ratio, potential 1.5 return, but we'll see how market will react. I hope it will be good. Later on, I have the second position, which I'm trying to take this swing low, where the automatic rally, where the buyer started to buy here, and where is also 100 Fibonacci expansion 100%, which means that I will try to take about 1-5 ratio. So again, this is a forex, so the risk is in the first place, so don't overextend risk. Even the setup looks very good, and everything, you keep risk under control, and there is no, you're not nervous, you have everything under control. So even you hit a stop loss, you have a new setup, something will happen, and you just stick to the plan. Okay, so why price didn't broke this higher and continued higher? You know, since you saw this, this can call why this is not a sign of the strength, you know, and that this is a continuation of the strength and price go higher, because again, market and professionals, market actually don't like the ultra wide spread bars. When I say spread, I mean the distance between the swing high and swing low in that bar, and especially on the ultra high volume. That's a like absolutely calling, you know, calling professionals, pay attention on this one. Something happened on the GBP pairs, you know, pay attention on this, and they are absolutely focusing on this one. So you can absolutely easily see, relatively easily, to this 61.8, and you know, I'm expecting even this automatic rally. And one thing also, how we knew that they don't have power to push higher anything above this, because this reaction here, it's a very weak. So buyers are so exhausted there is no professional buyers, you know, they did all effort in the news here, and this can relatively easily drop, you know, 100 pips or more than 100 pips. Even today it can drop to my first target in the next few hours. Why? Because professionals are selling, buyers did all the work here on the news effect, and they don't have actually real power to push this higher. That doesn't mean that we will totally reverse and absorb totally this buying climatic area, but in the short-term perspective, we may really see 61.8, where is my first take profit zone, this automatic rally about 130.45 area, 130.50, and we may see 130.110. Even though we can go all the way to see, to test this supply where actually this big demand came. So to test this area, again, it's all depend on where the professionals will exit, how much they will hold their strong positions large. If they exit earlier, so they probably don't want to test this, and this can, one thing, this can still go higher later on, but what's the key part here? It's to use news and big liquidity into your advantage. So it's I didn't say that we will not see maybe later on higher prices again to potentially strike this and try to attack this buying climax level, but for now that's absolutely no way. And as you can see, I'm right now in the plus already, about 40 pips, so this is going very, very good. Okay, so we have possibilities that price go here, then some stop, you know, maybe later on price go here, just automatic rally, and maybe if there is enough supply, price can go higher, or even go to test this buying climax. No, but if there is enough supply and we break this swing low and automatic rally, and we break the Fibonacci expansion 100%, then probably we can even go to test this hole where actually this massive buying started. And if there is no enough supply to break through that, also it can happen that buyers come again and buy all the way upward and try to go upward again. But it's all depend what we'll see on these points. If we see supply strong and we, you know, and we breaks, you know, we break this on the high volume, this can be a total absorption and starting of the big distribution by professionals. Okay, so be very careful with trading yen currencies. This is a big opportunity for professionals to sell, and this is how professionals earn money. This is also what how I earn money. This don't happen every time, but when it happens, you know, you must watch carefully, try to position yourself the best you can, and then of course benefit from that. Okay, so again, I can show you also the futures market here. So you will see on the futures market there is a massive buying climax here, and you see that demand is very, very low. So how can something go higher if there is enough power, you know, even watching the futures market? So of course we may expect supply to take the place, in that we see some testing of the supply and test of the points, test of this swing low later on of this one. Okay, so back here. So again, we lost a lot of demand there, so cannot break with the low demand the massive swing high where this massive buying stop. Okay, so again, this is how I want to benefit, and I want to try to catch 1-3 ratio and 1-5 ratio in my two positions. We'll see what will happen, but this is absolutely how you can analyze the market, you know. And remember one thing: you don't want to trade the forex basically if there is no large liquidity, if there is not, if you know, if everything is sideways, if everything going on the low volume, if market is going sideways, you know, there is no enough power, you know. What is actually the job of the trader is to when there is a big liquidity, you want to try to read, not to trade during the news, not before news, I say after news, to read the anatomy of the price action and volume on the critical points, you know. And after that, see how big demand is, supply is, and what happened. And if with knowledge, you know, you should be able to recognize what actually the professionals like to do and what they tend to do, you know, and you ride with them. When I say professionals, and I mean on institutions, on the banks. Okay, so the point is to use the big liquidity in your advantage, take the profits and watch that zone. If maybe you will have opportunity to buy later on, maybe we'll have opportunity to buy. For example, price go to this automatic rally or to this area and we see very, very low volume, you know, this still can be a push higher later on in potential triumph. We can buy there potentially. Okay, but what we got in the first stage here is buying climax, automatic rally, testing of that climatic zone, and very low volume on this test. Also 61.8 expansion, and this is a good area to place the order. You put the stop loss like 30-35 pips, and you can go to try to catch 100 or 150 pips. If you enter it here, you actually risked, you know, and your stop loss must be much higher, like 80 pips, and you will go just to 114. So even if the risk reward ratio it's very bad at this stage, not just that, you risk the price go exactly to test climatic zone and also 61.8 from this point here. So this is a bad actually entry. If someone entered there, that's not good entry at all, you know. This is a very good entry around this stage here, you know, and this is the best entry you can, which was offered around this stage here so far. Why? Again, because the risk reward ratio is much better than if you entered here. And not just that, you waited exactly 61.8 and exactly to see how strong buyers will be at this stage when they try to go above, and they were very weak. So I start to sell. Okay, so again, if you like my analysis, if you want to learn my method and how the professionals are trading, what is main focus here, and you know, how to scan all the currency pairs and see the liquidity and use the liquidity in your favor, and just try to take the part of profit and then scale out. That's all you need. Remember, so that's all you need. So what's the point? If you entered here, you basically don't want to chase I don't know, you don't want to predict that we will totally go all up, you know, and you earn 300-400 pips. No, you see that some first support levels, first big support levels, which we got in this stage here, and we have this 61.8, which can be a good take profit zone. Also, there is a 200 MA as well there, so that can be, you scale out there, you know, if the price reach that, of course, you scale out there, you take one free ratio, and in this second transaction you can of course secure and wait this for example this level here, and also try to take 1:5 ratio, and you scale out there. So you know, you don't want to, you know, wait and never scale out position. Okay, that's it for this analysis. I hope you enjoyed. If you like my analysis, feel free to like my video and subscribe on my YouTube channel. Also, if you want to start my mentorship program, contact me on the Skype petar.jacimovic, and I will be happy to start a cooperation. Cheers and good trading.